AMD going sideways? That's actually your edge with this strategy. This is a double calendar spread, two calendar spreads stacked together. A call calendar at the 505 strike and a put calendar at the 530 strike. You're selling the near-term options expiring June 18th and buying the same strikes expiring June 26th. See this tent shape? That's your profit zone. AMD stays between roughly $477 and $565. You're in the green. But if AMD makes a big move in either direction, past those outer edges, that's where losses kick in. Both sides are defined risk. You have two break-even points, one below, one above current price. Stay inside them and time decay works in your favor. The short options expire first and bleed premium fast. Your long options hold value. That difference is your profit engine. Low cost, two profit zones, built for a ranging market. That's the double calendar on AMD. Follow for more.